Family. Hey, y'all, I have something real special for y'all today. Hear me out. We're gonna do a trade recap on what happened the last 2 trading days. What my mindset was, what I was looking for, and what I did. Y'all, this is gonna be a special one. I'm gonna give y'all some insight. I'm gonna give y'all some knowledge. I'm gonna show you exactly what I looked for. Make sure you sit back, relax, get your snack, and get ready for the video. So, first things first, y'all. We're going to look at April 16th, 2025. Okay, if y'all can see by the date here, it's the 18th. This was 2 days ago. We're going to go over the last 2 days and what exactly happened. Now, keep in mind, guys, that, in the previous video, if you haven't watched it, I explained exactly what I do and how I do it. If you haven't watched it, I'm going to put a card right over here. You're going to see it. It's going to pop up now. You can go watch that video and then come back and watch this one. So let's get into it. So the first things first, we're going to go we're gonna load up the new week and new day opening gaps. I still have to update it here, but that's all right. Just give me a second. All right, so hold on, let's remove the executions real quick. Y'all can see that in a second. We have to load up the layout again. Sorry about that. So we're gonna look previous, right? We're gonna look. Obviously, you can see this new week opening gap. It's a big gap. And price was just at this level at around 4 a.m. Eastern time. Cool. Whatever, right? So I'm looking. I see, okay, we have a cluster of new week opening gaps up here. Now, hear me out, guys. Hear me out. We also have a cluster of new week and new day opening gaps down here. Now, you're probably thinking, Michael, isn't the cluster of new week opening gaps stronger than the cluster of new day and new week opening gaps? No. Watch. Whenever you have a cluster of new day opening gaps and of new week opening gaps, that target is going to be stronger than just the cluster of new week opening gaps. I mean, look how far-fetched this is, right? This is closer than this. Now let's head into our regular charts, our trading charts. Keep in mind, guys, new week and new day opening gaps is crucial, right? It's a reference point for where the market is going to go to next, right? They can't hide this stuff from y'all. So let's go over the 16th first. Before I begin, if you guys are new to this channel, my name is Michael. The name of the channel is Michael Praying and Trading. What we do here is we pray to the Lord and we also trade. This is our journey to becoming the best trader we can be, and I show everything on this channel. If you're new here, make sure you like, you comment, you subscribe, and let me know what you want to see next. Let's get into it. So, okay, as I just showed you guys, right, the new week and new day opening gaps, obviously we're looking for lower prices. Watch this. So, as I told you guys in the previous video, if you haven't watched that, go watch that now. We always start at 7 a.m. Michael, why don't you start when the market opens? Because I'm looking for relatively equal highs and relatively equal lows before market open. Watch. So I see this, right? I've explained that, if this low right here, right, if this low is lower than this low, the work has already been done for this low. So cool. I'm seeing this, right? It's 7 a.m. Eastern time. I'm seeing all this. Boom. You guys see all that? All that is relatively equal. Now, the market goes up, right? Now I see that we have relatively equal highs, right? But these haven't formed yet. Keep in mind, we're here. This was the first high I marked, right? Because the high, these can't be relatively equal no more. It's already put in its work. It put in its work. Let's see. So we never mark the 7 a.m. candle. So here's the first high. Okay, cool. Made another high. Made another high. It's lower, right? Boom. The work has been put in. Cool. Can't mark this one. High, lower high, lower high. Boom, the work has been put in again. Can't mark these. And then I see this. Once I seen this displacement right here, I kind of had an inkling that the market wasn't going to go back up there right now. And that's cool. I was already looking for lower prices. Everything was matching up. Guys, watch. Remember, in the previous video, I told you guys, you can't enter a trade until you see displacement below a swing low, or if you're going up, if you're looking for buys above a swing high. Okay, now we see this displacement. I immediately mark it. Here, let's put on the chart executions real quick. I see this displacement. Once this candle closed, in my head, I'm like, hey, I need to place an order here. Okay, I need to place an order once this taps back in. I'm going to explain to you guys where my stop placement was and how my My brain was working. Okay, so as we can see here, okay, hold on 1 second. Okay, so as you can see, I did place my order a little early. Here's the reason being, I was trading on my phone. So on the phone for Top Step X, Top Step, if you're listening to this, please fix this. I cannot place a limit order here like I do on TradingView. Right, for me to do that, I have to go to the DOM. Not everyone likes to use the DOM. The DOM is a waste of time to me. Cool. If you guys can fix that, please fix that if you're listening to this. So on my phone, as the market was trading up, I placed a sell order. It's going against me. As the market was trading up, I placed a sell order. Once the market came and hit this line right here, as you can see, 899.50, right? Watch this, 899.50. That's the line of that square. I placed an order. I placed 2 more orders for sell. Bam. Market's going against me, right? It comes up, then it comes back down. Now, my target was below this initial sell side. You're probably asking, Michael, why is your target below that initial sell side? Here's the reason being. Right? We have all these relatively equal lows. Each one of these is a target, right? But I'm aiming for the bigger target. Remember, I go for at least 40 handles. That is my minimum. That is what I want to achieve. So let's continue. The market comes down. It continues. It opens here. It comes straight back up. At this point, it's still against me. Once it comes back down here, I'm in profit. So I was sitting through all this. As you can see, the market wicked all the way down here. Quick movement. As the market was coming up, right, was coming through all this, doing all this, I was negative, okay? Up here, I was negative about $100. Did that stop me? No. Here's the reason being. I was already expecting lower prices, guys. Keep in mind, I'm already expecting lower prices. In the perfect world, this is what I would want to see. In the perfect world, I would want to see the initial buy side be taken out first. Now, could that be my fault that I marked it wrong? Yes, it always is my fault. Right? Because I could have marked these relatively equal highs and then called this being it taken out. But this was the target I was aiming for. Okay? So cool. I'm down $100 here. My stop was above here. The reason being is because in my mind, just in case the market wanted to take out the buy side first, in a perfect world, my stop would be up here. As you can see, the market never came back. Right? And I'm going to explain why I didn't put my stop above the candle of the fair value gap, because of this reason right here. Okay, cool. The market is, I'm down $100. It's coming back up on me. It immediately comes back down. It keeps trading down. Then we consolidate, right? Usually, I would want to see these candles stay below consequent encouragement of this fair value gap. You're probably asking, Michael, what is consequent encouragement? Consequent encouragement is the middle of that fair value gap, that imbalance. Okay, these are the bodies. The wick does the damage. Right here, let me remove the, actually, you know what, oh, come on, mouse, here we go. So the body, the body of the candle is here, right? The wick is the lines that you see there, right? These lines below it. The wick always does the damage. Look how it did the damage here. Usually, I would want the bodies to stay below consequent encouragement, never close above it. But I was like, you know what? I'm expecting lower prices. I'm going to trust what I have already. Cool. So the market drops down, it drops down, and it's gyrating within this big area. As you can see, a lot of wicks, right? A lot of things going on, right? At 8:30 is another crucial time, right? At 8:30 is when the market's going to do something. It's going to do something specific. Do I know? No, but I know the market's going to move. So at 8:30, this is what happened. See that candle? See how the body of that candle is small, and then the wicks, it was trying to do damage. It wanted to figure out what way it wanted to go. Do I know what way it wants to go? I'm thinking down. Am I perfect? No. So we get here, right? The market wicks immediately above where I would have initially placed my stop. Now, as you can see, the market wicked above there. That's the reason why I didn't place my stop there, right? I placed it above here just in case. But you see that order block right there? It didn't go above that. It reached that, but it never hit. It never went above the middle of that. So I could have placed my stop a little bit lower, but I was just trying to be safe. So here, right, we wick above, and I see it immediately come back down. I'm like, cool, okay, things are happening, things are going my way. So I wait. I usually don't wait this long, right? Because I want to see an immediate reaction to the consequent encouragement of that fair value gap. And then this happens. And as this was happening, I was making breakfast. You know, I was doing my thing. I was boom, 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 trying to pack, trying to, I was doing my thing. So I look at it, I'm like, okay, this might be good. This might be good. So that displacement, right? Once I seen this below these lows, guys, in the previous video I explained, once you see displacement above a swing low, the market is literally telling you which way it wants to go. I cannot explain that enough, guys. Really, once you see displacement above below that swing low, the market is literally telling you what it wants to do. This right here is your confirmation. Make sure y'all write that down. This is crucial. So cool, I see it. As you can see, the market is not coming back up to this. It continues going down. Cool, it hits my target here, right? I get out at, you can see here, 18,651.50. I get out here exactly at my target. Now I could have left a runner. Reason being I didn't leave a runner is because I was going to be busy throughout the day. I had to work. I had to do other things. So we got out there. No loss taken. Cool. So let me explain something to y'all, right? This was my initial buy side, all right? Relatively equal highs, okay? These are all relatively equal. Relatively equal. The market continued going down. The market eventually came back up, right? Came back up. What did it take out, guys? What did it take out? The initial buy side. So what does this turn into? Buy side liquidity at this point, right? This would turn into the buy side liquidity. It's the same thing here, right? This, once it was taken out, whatever took it out, that is the sell side liquidity. Cool. What did it take out? The initial sell side. Then you mark the sell side liquidity. What is the market going to take out after that? The sell side, right? This happens every day. I explained this in the last video. This happens every single day, and it's never, ever going to stop. Never. Okay, now let's move on to, and once I explain what happened the next day, we'll go into the stats here, and I'll show you guys how much I made and all that. Just wait, guys. Just wait. So let's move on here. All right. So we're now on to the 17th, guys. The 17th. This one was an interesting day. Okay, again, we start at 7 a.m. We always look for relatively equal highs starting at 7 a.m. Okay, I mark my initial sell side because I see, what do I see here? Low, higher low, higher low, higher low. What are these all considered? Relatively equal. So I mark the lowest one. Initial sell side. Cool. At this point, once we get here, I mark this line. Okay, I mark this line as is. I just did what I thought was going to happen. Okay, initially I marked this bearish fair value gap, and I kind of had an inkling that this displacement or this down move was not enough. It wasn't. So cool, I mark it. I step off the chart for a little bit because this is the next day. I'm still doing my usual routine. I'm doing everything I need to do. And I mark it to take out the buy side first. And this is what I was trying to explain to you when I was explaining what happened the previous day, right? In a perfect world, you'd want to see it take out the buy side first for you then to move to lower prices, okay? Now, I only trade until 11:30. All this price movement, I couldn't watch. I was busy working, all right? It is what it is. I'm not going to get into that. I was busy working. So I log into the charts real quick. At this point, it's, let's see, when did I get in? It's the 10 o'clock silver bullet, right? I'm like, cool, something's gonna happen. Let me just watch it, see what happens. Keep in mind, I am still aiming for lower prices. But watch the paradigm shift here, right? I don't want you to follow what I do. I don't want you to try to copy what I do. And I don't want you to change your bias. Your bias should always remain the same. If you're aiming for lower prices, go for lower prices. That should be a trade, lower prices. If you're aiming for higher prices, go for higher prices. That should be a trade, going to buy. At this point, since I'm trading a little later, I knew that the bias wouldn't remain the same, okay? Things already happened. Initial sell side, initial buy side was already taken out. The market was already moving. I see this displacement. Boom. Let's mark that real quick. I see that displacement, right? Keep in mind, I see an energetic move up. This stopped exactly at this candle's high right here. Okay, you see the body, but it wicked above it. And then this happened. Okay, so I consider it displacement. In a perfect world, you would want to see this candle close above it for it to come back down into it. But watch this. So the market continues moving up, it comes down, and it hits that. Okay, remember, my order is always going to be somewhere at the top of this fair value gap, right? Because I want a low risk, high probability entry. Okay, I knew that the trade was going to continue going up here. Here's the reason being. Okay, remember, in the previous day, the bodies didn't stay above consequent encouragement of this fair value gap. But guys, look at this. Look at this. Please tell me that this is being hidden from you. It is not being hidden from you, right? Look at this. The bodies never went below that and never closed below that. So I knew. I'm like, I'm onto something here. So I waited and I waited. Keep in mind, the market's going up and down here. At this point, I'm down about 80 bucks. Was I nervous? Sure. Was I scared? Hell nah. But watch, market never, the bodies of the candles never closed below this. So that was my confirmation. Hey, the prices are going to go higher. I just have to wait. Continue to consolidate, consolidate, consolidate. As you can see, remember, the wicks do the damage. My stop placement was below here. You're probably asking, Michael, how come your stop placement is always changing? How come in the previous one, you had it below here, right? And then this one, you have it below the fair value gaps candle. Here's the reason being, right? There's more space here. For me personally, right, this is going to differ from everybody, right? For me personally, there's more than enough room here, right, for it to do its damage. If it really wanted to, it could have came all the way back down here and then continued up, but it didn't, right? I already had confirmation it's not going to go too far by the closing of the bodies of these candles. So it comes all the way down here, and then it immediately gaps back up, or immediately comes back up. And then this happened. Displacement. Let's mark that. Displacement. You guys remember that word? Displacement above what? The highs, right? Highs that are what? Relatively equal. Displacement. And then we get this big, huge spike. Boom! Right? So I sold one here, okay? 18,391.25. Or, I'm sorry. I sold one at 18,391.25, and I left two runners, all right? And then I didn't leave it running for too long because I didn't really have time to sit there and watch it. So I just sold everything. As you can see here, it says 4 because I made the mistake of selling 4 of them instead of selling 2 of them. So it got me into a trade going down. So I had to close that and do the opposite. You guys know what I'm saying. So considering all that, and that was my mindset and what I was looking for, now let's move on to how much we made, because I know that's what you guys are here for. Okay, right now we're on 100%. We haven't lost. We won 2 days in a row. We're on a streak, 100%. And the last 2 days I made $561. All right, risk management. Okay, go with your bias. If you know that your bias, if you have an inkling that your bias is wrong, change it, but don't change it too prematurely. Okay, so let's go down here. Go down. I made $244 the 16th, and I made $317.04 on the 17th. Reason why I made $317 here is because I left a runner. Keep in mind, on the 16th I didn't leave no runners. I just got out exactly at my target. Okay, guys, I wouldn't be able to do this without the help of the Lord, right? Without me myself also putting in the work to learn these things, right? Staying patient, continuing to trust in the Lord, and continuing to trust in yourself as well, right? That is very important. If you guys are on the same trading journey, let me know in the comments down below how you guys are doing, right? If you're just starting out and you don't know where to start, my advice to you is to start. It don't matter where, just start. Look something up, learn something. And I know it's cliche to say, right? Because 99% of the stuff that you try to learn is usually going to come out to be bullshit. Excuse my French. But it's better to start somewhere than to start nowhere and never get into what you really want to do. I say this because I want y'all to succeed as well, okay? I'm not perfect. I lose. But we've been blessed enough to win 2 days in a row, and I'm happy with that, right? Remember, accumulation of wins and wins and wins and wins and wins and wins and wins, couple losses, whatever, it adds up over time. If y'all enjoyed this video, make sure you like, you comment, you subscribe. Make sure you comment down below. Let me know how you guys are doing in your trading journey. Let me know what your strategy is. Let me know what you look for, what your mindset is, and how you do it. Remember, stay blessed, stay patient, and continue trading wisely. Until next time, peace.
Yeah. Overtime, 'cause I ain't have a mic. I was in that Chevy.